for the last maybe 5 to 6 years, digital bank was a hot topic.
Yeah.
Okay, every central bank in Southeast Asia wanted to compete with each other, see who can roll out more licenses. Okay,
About 15 trillion pesos is the size of the micro SME market in the Philippines, and it has a 15% year-on-year growth since several years.
rich family or oligarchs in the Philippines does that. Most of them own their own banks, which is something very unique in the Philippines.
The thing that I would see that most fintech companies are not really successful because they really went on, I would say, 100% digital.
Your footprint, together with your digital transformation roadmap, is yielding you results, I think, far better than, I would say, a typical digital bank.
We're traditionally before receiving payments to checks. Nobody uses checks anymore. I don't know if some of the Gen Z would have even seen a check. So the payment method had to change.
Lifestyle now of the younger generation, the millennials and the Gen Z, it's about speed. It's all about speed and convenience. Okay. So therefore, that one actually factors into the change in the consumer behavior.
50% of the population in the Philippines has a mean average age of 24 and below. That means the trajectory of economic growth moving forward, new people going to the workforce, into the communities that RFC is serving, and the need and demand for consumer credit, business credit will continue to grow. Okay, and that's the reason why Philippines, among the ASEAN countries, has one of the highest GDP growth rates, between 6 to 7%. A very good morning to our audience, and Mabuhay all the way from Philippines. I'm very excited today to be joined by two fantastic guests that has cordially accepted my invite to be joining me in this Finteq Frontier podcast all the way from the Philippines. Okay, and I would like to introduce our guests here, and I'm very proud to be joined by Sir Donald Chiong, who is the President and CEO of Radiowealth Finance Company in the Philippines. They have approximately about 150 locations spread out throughout the country, and they are serving a particular community here that really matters to the financial inclusion and the financial literacy and education. Part of the journey here with RFC is that to add more value to the communities that they are serving. And I'm also joined by the head of operations, Sir Jeff David, and he looks after all the operation matters, and we will delve a bit deeper and getting insights from them on how they have managed to successfully run this organization that has been around for 6 decades. Yes, 60 years and going on strong. And in this podcast, we will also look into their digital transformation journey, and we will try our best to articulate the best we can how they successfully transformed throughout their 60 years and what made it possible for them to last this long and be still relevant in serving the communities in the Philippines. All right. So I will start off by just setting the tone for this particular podcast with some numbers. You guys know me, I'm a number guy. So did you guys know that in the Philippines, right, micro and small sized enterprises account for 99% of business in the Philippines?
Yep.
Yes.
That's true.
And it generates 65% of the country's employment.
Yes.
So what I'm trying to highlight here is that the role that RFC is playing for the small businesses and the micro enterprises in the country cannot be understated.
Yes.
And I need to highlight this because Philippines is a very unique country where, yes, there's a lot of banks, Universal Bank, famous ones, I will not name them here, but they generally don't serve the kind of community and do the kind of lending that RFC is doing.
It's true.
Yeah. So what I'm trying to say is that the impact of you funding those micro businesses and small businesses and traders has a far greater effect to the economic value creation of the country as a whole.
Yes.
So that's one of the things that got me excited about speaking to you guys, is to get more insights about what is it that you guys have been doing that gave you this tremendous amount of trust that you have with your clients across the whole entire country. So I'll start with Donald first.
Sure.
Could you give me some of your insights based on your experience in this company?
Well, to add to the figures that you mentioned, approximately about 15 trillion pesos is the size of the micro SME market in the Philippines, and it has a 15% year-on-year growth since several years. So you can imagine the kind of market that it poses for the Philippine economy. As you mentioned, it gives a great amount of contribution to the economy of the Philippines.
Yep.
So how has RFC played a major role in this industry and different from how banks would approach it? For one, the location. Key to RFC's success today and even before is a well-placed, our network is well-placed and entrenched in a lot of the provincial areas. Now, you do not see Radiowealth Finance here in the urban, Metro Manila urban setting, because this is where all the banks are, this is where some of even our major competitors are located. But we see a lot of opportunities in the provincial areas. And key to our success is really the relationships that we have built over the years. What was mentioned that RFC has been in the business for 60 years, more than 60 years. We've celebrated our 62nd year just recently. And we started really as a financing arm of the family, of the shareholders who started the automobile and radio. They invented the first radio sets and television here in the Philippines, Radiowealth, and we became the financing arm for its customers. And then we went into transitioning to financing appliances that were sold here in the Philippines. And because of that, Radiowealth, as its name, has been well known because of that brand, where you see the radio sets that were placed in most of the homes in the Philippines, and that serving the financing needs would just be really second to none, and it would be easy for a brand recall even until today.
Yeah, so basically I think that was a smart business move by the founders, right? To expand on an ecosystem that already been developed by the original business model and going into finance. I would say rich family or oligarchs in the Philippines does that. Most of them own their own banks, which is something very unique in the Philippines that I found as a so-called third party to the country, right? And okay, so touching on that, trust is very important, especially when it comes to financial services. Okay, and I think RFC has tremendous goodwill in that area, intangible value that a company creates through a very long established, I would say, timeline. Okay, so in this case, in this instance, you can pack RFC's goodwill into 62 years of being in the market, being in the lending space, providing financial services to the communities in the country. So that goodwill itself will translate to the next phase of your growth, I would say, provided that RFC incorporates things that they need to probably improve to continue to be relevant and competitive versus the other players in the market. But one thing I realized in the Philippines is that the market is very big, very vibrant. Correct me if I'm wrong, let's throw in some other new data. I think total the population here is 117 million people.
Yes.
Plus minus. But the fantastic thing that a lot of people don't know is that 50% of the population in the Philippines has a mean average age of 24 and below.
Very young.
Yeah.
Okay, so that means the trajectory of economic growth moving forward, new people going to the workforce, into the communities that RFC is serving, and the need and demand for consumer credit, business credit will continue to grow. Okay, and that's the reason why Philippines, among the ASEAN countries, has one of the highest GDP growth rates, between 6 to 7%. So that means RFC is placed in a very good industry, in a very good segment. Having footprint in 150 over location allows you a little bit more opportunities to be charting your growth moving forward over the next maybe 5 years or so. Okay, so having said that, maybe coming from a more technology-driven perspective, I would like to pose my next question to Sir Jeff, because you're a bit younger than the both of us, so you probably understand the market better in terms of how people consume technology and whether do your customers, do you think that RFC needs to serve the customer from that perspective in terms of change in consumer behavior where they're looking for more digital financial services? So that's a terminology that BSP uses. It's called DFS. And that's something that they're working on very actively to bridge the gap in order to create or to basically get the numbers of financial inclusion going up. So they go through
Which
DFS.
now stands just at still at 20%.
Okay, all right. You're right. It's about 20 to 24%.
Yeah.
So our numbers are quite accurate. So, Sir Jeff, could you just give us a little bit of insight? Have you felt that, like your age group and below, has the consumer behavior changed in how they consume lending services? And what do they expect moving forward, let's say in the next 3 years? What do you think that the market trend is looking like for RFC?
Yeah, thanks for that, mate. That's actually a very good question because during my earlier discussion a while ago with your team, one of the things that I mentioned is that there's a change in the market dynamics already. So if you would actually look at it, the people on the top of the food chain right now, I would say, these are younger generations. So having said that, if you have the millennials and the Gen Zs on the top of your food chain, during our lifetime, this is where the internet revolution happens. Starting from 32 kbps to 64, now it's actually not just mbps, but actually gigs, right?
Gigs already right
Gigs
now.
already. So everything is in the internet, okay? So having more access to information, meaning we can actually use that to our advantage. And then the second part is that the lifestyle now of the younger generation, the millennials and the Gen Z, it's about speed. It's all about speed and convenience.
Yep.
Okay. So therefore, that one actually factors into the change in the consumer behavior. Customers, or being the millennials or the younger generation right now, they are willing to pay premium, okay, for the services that they actually want. So that's why more and more Filipino people, both the Gen Zs and the millennial generation, are now into digital onboarding platforms or probably P2P lending platforms. So as still being a community lender, community-based lender, we somehow need also to, I would say, expand or actually elevate or scale up also the way that we actually operate in these communities.
Yes, I can see that. The digital transformation roadmap, I think that RFC has embarked on, I think by the actual big investment in changing your core lending platforms back in, I think during COVID time, that's where I met Sir Jeff and Sir Donald, and that's since 21. So the last 4 years, okay, looking back and coming forward the last 4 years,
Yeah.
has this digital transformation that you embarked on been proven successful to today? And do you see that it is actually helping you to be staying relevant and being able to serve your customer better by actually enhancing your so-called digital architecture within the business organization itself? Has that happened? Have you seen positive metrics?
Yeah, having for me or basically the synergy platform on board. If you put it on the technology roadmap, I would say it's still our year zero. Year zero, obviously, there's still a lot of enhancement. There's still a lot of catching up when it comes to digital transformation that we need to do, that RFC needs to do. But one thing is for sure, at year zero, we are actually somehow stabilized the foundation by bringing in this your core banking system being the LOS, the LMS, and the DCS. I would say huge improvement already, particularly in reducing some of our turnaround time, the way that we actually lend to our customers. Synergy help us with is the configurable or the flexible workflows, because part of the servicing or the changing market needs right now of the younger generation is that you need to tailor fit your approach to each market segment.
Mm-hmm.
So it cannot be a one size fits all. So
Okay.
that's the beauty that we actually have, or that we are enjoying with Synergy, because you can easily configure workflows, not to mention probably product that would actually cater a particular market segment.
Yes, yes.
I would like to add,
Yes.
if one cannot imagine how important digital transformation was for RFC. In the case of the pandemic, which you mentioned, if we did not take that step prior to the pandemic to deliberately transform the way we do things in terms of our processing, in terms of how we review our loan applications and send them off to the approvers, if we did not start that prior to pandemic, I can just imagine that possibly Radiowealth Finance and most finance companies who also did the same journey as would not have survived the pandemic.
Yes.
Maybe unique to the Philippines is the only institutions that were allowed to be open during the pandemic were really just banks.
Yes.
Finance companies were not one of those companies. So we were not allowed to go out. We were not allowed to, and essentially before the digital transformation, we were really just a brick and mortar company. We would send tons and tons of applications and documents to the head office for us to review and process. Because of that, the new process, it allowed us to digitally send the documents, review the applications, and someone, as far as an application sent all the way from Mindanao, and somebody has to approve here in the head office, we would instantly review that and approve that within a few minutes, or depending on how big the loan size is. And that continued on, and with the entry of the new platform that we acquired, Synergy, enhanced that even further. And we are now at the age where Jeff mentioned that the market now expects speed. The entry of fintech companies into the market, they would approve loans within minutes. And traditional finance companies like ourselves have to compete under that kind of arena. And the challenge is to be able to further improve the systems that we are using with the strength of how we review loans, relationships, and incorporate that and match the speed, or maybe be close to the speed at which fintech companies are approving the loans.
Yes, absolute point. Those are great points. And I think to sum it up a little bit, I would just like to add some of my insights too. Now, you guys are in a very unique position, because one thing that I can see successful financial institutions behave in the same manner, or have the same kind of business model and same kind of like setup in terms of the ecosystem. So what I'm trying to say here is that RFC is in a very unique position, because you have taken the leap to modernize your key critical financial core system, but at the same time, you also have a roadmap where your success came from being in the right location, being in the right communities to serve the people that you want to serve, right?
Yes.
So your footprint, together with your digital transformation roadmap, is yielding you results, I think, far better than, I would say, a typical digital bank. Because probably a lot of people don't realize it, in the financial services sector, for the last maybe 5 to 6 years, digital bank was a hot topic.
Yeah.
Okay, every central bank in Southeast Asia wanted to compete with each other, see who can roll out more licenses. Okay, and all these digital bank from the central bank, the essential objective for them to roll out the digital bank licenses is for them to serve the unbanked, or in Malaysia's case, I would like to use that as an example, is underbanked. Okay, in Philippines, we don't have such definition as the underbanked. It's either banked or unbanked.
Yeah.
Because there is still about approximately, if I'm not mistaken, 36 million people in Philippines still unbanked.
Still about 80%.
Still the majority.
That being said, so RFC is making the right moves at the right time, because they understand the market condition, and that technology does play an important role. But what I would like to add on is that I'm very happy to be working with RFC all these years, because they are doing it in a way that is very strategic. Okay, not like you see a new digital bank coming here from a foreign country, they hoo-ha, and then they do a lot of clean loans, because clean loans is the only loans that you can do digitally.
Yes.
Okay, and then they get burnt for the first 3 to 5 years because they don't have actual brick and mortar footprint.
Yeah.
So it makes it very difficult for them to, I would say, recoup their losses. Okay. That being said, I would like to emphasize that because RFC has been in the business for 62 years, it's a very different ballgame. They understand the landscape. They understand that relationship matters when it comes to providing financial services and serving the communities with financial inclusion in mind. So I'm very excited because I think you guys are doing all the right things at the right time while significantly the market is being very competitive. But one thing that Sir Jeff touched on that I would like to highlight is also the flexibility of changing the workflow so that your entire organization is flexible and agile. So
Agile.
the key word is agile.
Agile.
And the other thing that myself being involved in the Philippines financial services sector for the last, I would say 6-7 years, what I've noticed is that compared to maybe a more mature financial market like Malaysia, is that the products that the financial institution comes up with needs to be more innovative, needs to really cater to the marketplace faster, and they should be able to catch on trends that the neighbor countries are doing to implement it here, to be able to carve out a niche for yourself. So I brought it up because that is what the capability you have right now, and bringing this and segue to what we talked about earlier about millennials and Gen Zs. What a lot of people don't realize is I like to always bring up in my podcast is that over the next 5 years, okay, the greatest wealth transfer is going to happen from the Gen X and the baby boomers to the millennials, the biggest wealth transfer. So if you are providing financial services to this group of people and you have been focused and your products and services targeted at these people, the next 5 years is going to be a very great trajectory for growth for any financial services. So that is in the data already. So guess what? They are the future customer. So is RFC prepared to be serving this new bunch of customers, or you're already doing it currently? So I'll put it to the floor.
Well, let me start just and then can pass it on to Jeff. But yes, we have customers who have been with us, like they've done business 25 times, 20 times. And it used to be that the old man was the one who was dealing with RFC and handling the business. And since then, he has passed the baton to his children, and his children now are the ones serving the market. So we have to make adjustments on how they would approach even lending. We were traditionally before receiving payments to checks. Nobody uses checks anymore. I don't know if some of the Gen Z would have even seen a check.
I don't think so.
You probably hardly see any Gen Z would have the patience filling out a 3-page application form.
You're right, absolutely.
Right? And that has to be now transformed to digitally and make it more simple and less information, and get the information from other sources. So that has been the challenge even for RFC. We have to throw away some of our old practices, keep the strengths where we have it, the network, the relationships we have still, but adapting to these new processes where the new markets are accustomed to. And yes, Jeff said agile, personnel. There has to be a lot of transformation, changing in the habits of people. Those who are not able to pick up, we will have to get the new personnel who would be able to adapt to that change easily.
Yep.
You said it right. Since 21 until today, the transformation in all industries have been so huge. One cannot even, run with the technologies. So it's been challenging even for the financing here in the Philippines, that with the entry of all the fintech companies introducing new ways of doing things. And they have failed in many ways, but some have succeeded. And we try to adopt some of the new changes that have been adopted because of the market.
Excellent. So Jeff, anything to add?
Probably in addition to that, I would say RFC actually leveraged on the core strength of not being too digital while still maintaining the community lending or the brick and mortar thing. That's probably our strength right now, because we started off as a household name in the community, being an appliance provider. And it started out from the vision of our founder that there should be an appliance for each and every household. So we have been remembered for that. And because of that also, we have actually, I would say, laid down our foundations for the brick and mortar thing. Hence, we are more considered like a household name. Now, the thing that I would see that most fintech companies are not really successful because they really went on, I would say, 100% digital.
Yes.
The problem with that
You're right there.
100% digital is that there's actually a lot of risk involved with that.
Yes.
Because technology actually provides you a lot of advantage, but there's a lot of disadvantages. No?
Yes.
Not to mention what identity theft, scams.
Yes.
And now it's actually being used for some actually fraudulent activities already.
Yes.
So these are all the trends and the risks that you have actually, I would say, need to,
Yes.
manage.
Correct.
So RFC actually places itself just right actually in the middle, not being too digital, while at the same time leveraging some of the foundations of what we made in terms of our digital transformation, while still combining the strength that we have, which is actually being a community lender.
Yeah, that's why I was mentioning earlier on that the hybrid business model actually works for the financial institution in the Philippines that plays the card well, like what RFC is doing right now. So you have locations that are brick and mortar, and you also upgraded your internal so-called digital infrastructure, so to speak, with modernized core banking solution. So you guys are placed in a very good area. You have trust over 62 years. So you have all the ingredients. And one thing I would like to add also is that what I've noticed as a external party to your organization is that you have a very, I would say, forward-looking board which supports the management team here, which also translates to the change of your organizational culture to be more modern, to be more willing to accept new ideas, and also to craft a strategy that's more agile. So I see that change over the last 4 years, and I really commend RFC for doing that, because the reason why I say that is because I also deal with, in my line of work, I also deal with other financial institutions, and I also have similar conversations that I had with you guys. But what I don't see is the result, my conversation that translates into a result, in a boardroom, right? Whereas in RFC, I see changes all the time, and it's always, getting better. So that part, I just want to add into our conversation, because I don't think our audience get to see those kind of insights. And I want to share, because for those that do not adapt, because technology is moving so fast.
Yes.
If you don't adapt, you're basically risking, I would say, annihilation. Because your competitors will not stay the same. They are always innovating too. They're always trying to figure out how to beat you, right?
Or actually, you should be prepared if you're not adapting.
Yes.
You should be preparing for your extinction.
Correct. So you mentioned a lot of fintech fail, okay? And I agree with you, because number one, fintech, if you notice, when there's a lot of liquidity in the market, when interest rates are low, they tend to do very well. Then you get a lot of new players coming in to try and take a bite out of the pie, right? But a lot of fintechs, when I do engage in the fintech community a lot, and I speak to the founders a lot, I'm not saying they're all bad, but a lot of them are misguided because they think that fintech is so easy, that you don't really need the relationship part, especially if you're a lender. So that part I would like to stress. In Philippines, relationship banking or relationship lending is very critical. It's not like a typical millennial that we have in Singapore that doesn't want to get out of the room and not talk to anybody. Filipino culture is very different. It's totally different, all right? So they don't really can live in the room by themselves. They are very social people. So that's why the hybrid model of actually providing the services with a brick and mortar and some conveniences via digital channels would be, I would say, the ideal mix. Correct me if I'm wrong. So maybe you could just give us a little bit of insight. So how did you guys get a positive reaction, feedback from your customer base, and maybe share a little bit of some maybe success stories from your customers that is positive for RFC moving forward?
Let me start just to comment why Philippines is unique to most countries today, especially like Singapore. Up till now, we don't have a working national ID system.
Very good point.
Um,
Very good point.
and even our credit bureau, it's being initiated by the government today, and that's a good initiative. But there's a lot of
Room for improvements.
yeah, I may say so.
As a third party, I'm allowed to say that. A lot of room for
So
improvements.
credit checks are unreliable.
Yes.
Tracing of a Filipino in his whereabouts is a huge difficulty and
Yes.
a challenge.
Takes a lot of resources.
So those two important factors are really necessary in lending.
Yes.
So this is why the strength of RFC, where we know the community where our branches are located, plays an important role. That's why Jeff saying at this point in time in the Philippine market today, an end-to-end full digital may not be a good solution in lending if you go mass market. It will be limited only to a few sectors of the market, but the majority of the population is middle class to low income.
Yes.
So, and that's where RFC serves today. The huge potential of that market is you can't even imagine. So being able to be located in and well entrenched in the community that we are serving gives us ability to know basically the living community there. So we are able to determine the important C's of credit. One is character. You do not just judge character based on the person's interview, which of course is impossible in digitally, but also knowing their families, their relatives, how they do business, how they relate with people, and that is not found in any
Yes.
In any platform.
Data point. Yeah.
Yes.
I actually followed one of my CI out there to one of our potential client, and we had to go through the process of talking to his neighbor,
Yes.
talking to his, what do you call that, village head or something.
Yeah,
He's
we're going
really
to
in the provincial area,
going
right?
to the barangay hall. Yeah,
Yes.
asking
How is this guy,
Yeah.
what is his reputation like,
Yes.
then these are things that are very unique. But at the same time also it's challenging
Yes,
because
yes.
as you mentioned, number one, you don't have a universal national ID, although the Philippine government did spend a lot of money
Started, yeah.
to execute it, but the feedback wasn't great. Your credit bureau is disjointed. I was very careful in trying to come up with that one word to describe it. Disjointed would be
Could be a good term.
could be a good term. A lot of room for improvement,
Yes.
and that's the problem, right?
To add to that is actually what you will notice is that just like the financial inclusion program of BSP, only about like 20% they have access to these financial products.
Yes.
So having said that, if you will actually relate that to the mass or to the entire population, that means the majority of the population still do not have this what we call digital footprint. So, and you know that like for example, credit scoring, all these financial technologies would only actually work really well if you have all of this digital footprint. So unfortunately, you can also, I would say, generalize or conclude that if 20% were only the bank population, then you would expect that only 20% of the entire population also have this digital footprint.
Yes.
So that's why it cannot really work really 100%.
Yeah. So
Telecommunications started using that, but again, unique to the Philippines is you would see Filipinos having 3, 4 different
Multiple
numbers
SIM cards.
because we are allowed to use different SIMs, and they would change the SIMs. So digital footprint, even for telecommunications companies,
It's actually a challenge. Yeah.
yeah, that's the unique thing about the Philippines, especially when you compare the digital maturity of the country as a whole. It's very segmented.
Yeah.
It's not like Malaysia, When we change something, it's like across the board throughout the
board, yes.
country. But because the fact that here you have 7,000 over islands,
Yeah, probably
so
because
demographically also,
Yeah.
it poses a challenge to a lot of things, right?
yeah, probably because
we have different dialects also.
yes, probably because we are an archipelago.
Yes,
That's one.
archipelago.
Second is that the country was actually started digital transformation, but up to now, our internet bandwidth still, I mean, the
Yeah.
poorest in whole of I would say Southeast Asia.
Yes, but I agree with you. But as a traveler that comes and visit your country often, I think your internet speed especially in the Makati or Manila area, NCR area, has improved tremendously
yes.
over the last 5 years. I could remember my first trip here in 2011. Oh my God, it's like I'm trying to decide whether to use Smart or to use Globe. Or I had to get two SIM cards and just to try, which is better. Now I just stick to Smart, right? Because it has worked for me so well for the last, I don't know, 6 years.
Yeah.
Okay, but yeah, that's the thing, you see. So that's the unique thing about the Philippines, where having said that, that's where the opportunity lies, right? So that's why I think RFC is in a very good position, made the right moves strategically and tactically, having 150 over locations right now, serving the people and having in those footprint areas. I think you guys are doing the right thing, but at the same time, technology is advancing so fast. So we're talking about credit bureau being disjointed. Digital footprints throughout the country is a challenge. But what do you think the next wave of innovation that's already happening right now, if you being adopted, could change maybe the landscape of how the data is perceived, data is mined for better credit risk assessment, especially when you have disjointed credit bureaus here. So do you think there's an opportunity there? So I would like to just get a little bit of your feedback before we end this particular segment, and we will take it up on the next segment, because I'm just, ramping us up for the next segment.
Sure. I have just a few comments. I mean, Jeff has a whole load of that, because moving to the next sector, I would rely more on the Gen Zs to provide that information. But there's a lot of talk of AI coming in. Even our board is quite alarmed and saying that RFC is kind of behind in that part. But if you look at the technologies that are being introduced using AI, really relies on good data.
Absolutely. You hit it on the nail there.
Yes, from
agree
data
further.
internally and data that can be accessed outside. Again, we are unique because our digital footprint of the market that we're serving is still unreliable, and it's not as complete as you would want for AI to be able to process it and give you the right process that you will have to introduce. So, having said that, we look at ourselves first. We want to be able to fix that data internally using the systems that we have today, and being able to consolidate all the data. Remember, we are 60 years in the business, and we just have a huge database. We want to be able to take advantage of it, mine it, organize it, so that when we start getting the systems that can use that and allow us to process information better, analyze data better. It's all about being able to lead ourselves to the right direction using the data that we have, the experience we have, and putting all that analytics together, and knowing what particular industry would have a better efficiency rating as far as collections concerned, and take advantage of that rather than focus and do a shotgun approach of the market. So I think moving forward, we want to be able to use that technology and have that technology provide that assistance and lead us to the right place, right direction, right product, right person to lend. And that, I think, is important for us.
It's a lot of things spinning in my head already, because I'm looking at it from perspective of 60 years of data, 62 years of data to be exact. I'm just like thinking like a big gigantic gold bar is flashing in my head right now, So that's how I relate. Data is good, and you guys have a lot of it, and because of the fact that the communities that you're serving are basically where a lot of the unbanks are. So if they were to go to a normal financial institution, let's say a bank, they will definitely not make it past the credit score.
Yes, definitely.
Because the credit score of banks are very regimented. Okay, why do I say that? Because in Malaysia, we have financial institution that's already exploring using AI to do the credit scoring in a way that this particular lender in that segment, he has the data. So he used those data to come up with the parameters of what could be the minimal requirement for them to lend. And this particular lender was visionary in a sense because he came to us and told us, hey, Malaysian Credit Bureau, CTOS, CCRIS, if I were to use their database and screen my applicants, okay, that once, let's say,
You will be no different from any other competition you have.
yes. So he saw the opportunity in that, and he said that if I have like every day I have a couple of hundred loan application, okay, let's say just loan motorbike two-wheeler, for example. Okay, let's put it as two-wheeler. So he has like 200 to 300 loan application two-wheeler, which the only credit bureau that he can rely on, because in Malaysia we only have one, okay, it's centralized to one. We call it CTOS or CCRIS. So every application that comes in, all the approval, the credit score is done through running through this credit bureau. Okay. Now his experience was high percentage of the application will be rejected by this credit bureau scoring system. So he decided to say, hey, I'm getting 300 to 400. It's not that I don't trust the CTOS or CCRIS credit bureau, but I think things have changed because he's lending to much younger people right now. Younger people that don't really have a tremendous long history of financial transactions. So these are the people that are being, I would say, discriminated against based on the existing credit bureau data. So he's looking at it from the right perspective. So when I heard about this, I think, yeah, he's heading in the right direction. So what he did was he actually used his own scoring based on his experience in the industry, based on his interaction with his client base, which is much younger right now. And he picked a few data points and we kind of helped him with creating this new scorecard, which eventually, believe it or not, the end result, which is what we are all interested to find out, is that the approval rate of those application improved by 20%. So let's just take 10,000 applications per month for, let's say 1,000 per month, okay, so for easy arithmetic, 1,000 per month. If you use the old way legacy scoring credit bureau system, the rejection rate, let's say, is 60% for that, okay? So 400 gets approved, 600 gets rejected. So what this guy did was he take the 600, put it into the new scoring that he has developed himself and improve the number by another 20%. So you take another additional 120 application got approved. So 120 application got approved. Let's say each application is 50,000 pesos and then you're lending it at X rate. So it already improves your top line and eventually will improve your bottom line because your interest margin will already improve. So this is one way technology is being used in Malaysia right now by the lenders. We have use cases doing that. And I see tremendous opportunity in that for also being applied in an organization and lender like RFC, which I'm very excited to explore further in our journey ahead. So that's all I want to add to our audience because this is a positive way of using AI that can actually help currently destroying the credit bureau environment, lenders that do not have enough financial history to be able to pass the so-called centralized credit bureau scorecard, and definitely the growth in consumer credit, double-digit year-on-year in the Philippines, all kind of like having the right ingredient for us to do something about it. So with that said, I think we will end this particular segment, and I think on the next segment, okay, we will talk more into the AI and the use cases together with Sir Donald and Sir Jeff and see what is applicable and what is practical for the Philippine financial lending landscape.